To say the tech industry's biggest players had a rough year on Wall Street is an understatement as firms deal with rising interest rates, inflation, and supply chain issues. But who were the overall worst tech stock performers of the year? Yahoo Finance's Dan Howley has been doing some digging and joins us now. Dan, take it away.
That's right. We had a not great year for tech stocks on Wall Street. The winners we went over yesterday came in with negative year-over-year percent growth, so declines for the year. But now we're looking at the worst performers. These are the ones that were just really down in the sub-basement of things. And as you could see, we gave them participation trophies. I don't think we should give them anything, but, we did. So let's start off firstly with AMD. They, like other chip stocks, ended up having a tough year because people just simply stopped buying computers. They bought all their PCs that they needed during the pandemic. Nobody needs a new computer 2 years after the fact, or even 3 years after the fact. They usually last about 5 to 7 years. AMD, Intel, Nvidia, they're all struggling with this at the moment. The problem with AMD, though, was that year over year, their client segment was down 40%. That's how many people were buying their PCs, their different devices. So their revenue was down as a result. And so they really were just one of the big laggards here. Then we have, after that, obviously, Tesla. We can't talk about Tesla, though, without talking about Elon Musk and Twitter. Firstly, the company itself suffered from issues, whether that's FX problems, whether that's the increased price of materials. That has a lot to do with it. But then as we saw the year drag on and we saw Elon Musk eventually go ahead and buy Twitter after that, will they, won't they kind of rom-com setup that we had in the earlier part of the year. Now he's in it and he's seemingly fully focused on it. And so a lot of shareholders are wondering, where's his focus on Tesla? Is it there or is it not? And so we're seeing the share prices of that absolutely get demolished year to date. And then finally, this one was the fun one to write just because it was so bad, is Meta. This company has seemingly been just tripping over itself since they renamed to Meta from Facebook. Mark Zuckerberg is dead set on turning the metaverse into, I don't know, a new world where everybody, Wall-E, where everybody just sits there in their chairs and doesn't really move. That's kind of what he's envisioning to a degree. He's dumped $10 billion into it in 2021. He's going to exceed that in 2022 and continue to grow that in 2023. He says the company says it probably won't be profitable as far as the overall picture for the company for maybe 5 to 10 years from now. I've talked to experts who say the metaverse isn't going to be a thing at all, or that it'll be 15 years from now. In addition to that, they're still struggling with the privacy problems that Apple's iOS changes have brought along. So it's the slowing ad market on top of that that has really just crushed their revenue. At one point, we talked about how Facebook itself was losing some users. They're not doing well with teens. I mean, I could just go on and on and on about the various problems that Meta had, and you can see that reflected in its stock price for the year. And, looking forward, some folks are saying, well, the ad market will rebound. Sure, but that doesn't mean that we'll get those teens back. TikTok is where it's at for them. Instagram, sure, but TikTok is eating Instagram's lunch. They're playing catch up the whole time to try to get with TikTok. So I don't know if Meta is going to return to the place that it once was or once stood at. Tesla and AMD, they seem to have a better chance at this point, although I guess you can never really count out Mark Zuckerberg.
Dan, while we have you, which of these companies is best positioned to have a comeback perhaps in 2023?
Yeah, I think, honestly, between the three, it seems more likely Tesla, right? Because AMD is going to continue to struggle with people. You don't need a new computer every few years. I'm not going to, and I'm a dork, and I buy new gaming laptops or new gaming PCs, more often than the average person. You don't need that.
I don't.
You get a computer, 5 years. Once the fan starts making weird noises, then you're like, all right, maybe I'll go and buy it. So that's a problem for AMD. What's saving them, though, is the server side and people buying those game consoles. The PlayStation and Xbox, those are AMD powered. So people buying those, that helps them, and the server side helps them. The client side, it's not going to do well, I don't think, for some time. Some experts I spoke to said it's going to be years before it really gets back to the kind of growth that they were seeing. Meta, like I said, I mean, what else can you say outside of, they're dumping this money into what very well may never pay off. The headset space is going to be big because of Apple jumping in there. But the idea that you're going to be in this metaverse world talking to people, I've seen the business use case for it, and it's not interesting. If you hate meetings, you're not going to like meetings because you're floating around with people that are dressed as dragons and robots. Nothing about that sounds appealing to me. So, yeah, I think out of the three, Tesla's probably in the better position.
All right, Yahoo Finance's Dan Howley with a look at some of the worst tech stocks of 2022. Thanks so much, Dan, for wrapping this up for us.